The US stock market was in a profit-taking mode yesterday, where the four major US stock indices closed almost unchanged. But very interestingly, the US big cap semiconductor stocks continues to outperform, where Nvidia, the biggest weightage market cap stock in the S&P 500 and the Nasdaq 100, rose to a 4%, which managed to breach into a fresh all-time high. The US dollar traded sideways as market participants continues to digest the conflicting news flow surrounding this Iran-US second round of peace deal resolution talk. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Tuesday, the 28th of April, 2026. So before we kickstart our Daily Dose today, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so here we go. Yeah, just to make sure that the screen is good. Right, I think should be all good. Yeah. So basically, before we jump straight into today's reduce, we call it flow for the daily dose, because given the fact that the the usual frequent cross asset classes that we cover on the daily basis didn't move that much, so we will not touch on all the individual technical outlook of them. So I will pick up various key asset classes to watch based on their interesting technical configuration. So before I touch on that, let's have a quick recap what has taken shape yesterday in terms of the relevant news flow and data releases. Okay, so let me start with the situation pertaining to the US-Iran war/conflict. So what you could see over here is that yesterday there was a interview with a key US political holder, Mr. Rubio over here, who is the Secretary of State. So take it away that he's something like a foreign minister slash secretary in a way. I mean that is potentially his role, a zero between the defense side and as well as the foreign minister side of the things. So he himself mentioned in a media interview that Iran still wants to retain control of the Strait of Hormuz, which is unacceptable to the US. And because of this particular statement over here, that throw in the tower. Still recall that yesterday I shared with you guys that Iran had drafted a new proposal handed over to US via Pakistan, stating that they are actually in the view of reopening the Strait of Hormuz. But after that, Secretary of State Marco Rubio come and state that Iran still wants to have a control of the Strait of Hormuz. So there's a bit of conflicting, we call it news flow on that aspect of things. And on the other hand, over here is that after that, there's this Bloomberg report stating that, okay, give me a minute. The US administration is weighing on Iran proposal. That means, despite Mr. Rubio remarks on that, rather negative remarks, this Bloomberg media report stated that Iran proposal is still being in discussion by the various US key officials. So the US officials has taken a look at this new proposal, but they did not immediately reject a big no based on this Bloomberg report. So they're saying that they're still weighing on it. They're still deciding the possibility whether to sit down together and have a second round of peace deal resolution talks. So with this particular conflicting news, we call it a flow slash event coming out from the US-Iran slash war conflict that is now entering on its ninth week, we see a kind of a consolidation movement in the US stock market. So the SPX, the Nasdaq, the Dow Jones, and the Russell 2000 closed almost unchanged. And what's holding the fort in the S&P 500 and the Nasdaq 100 is the significant outperformance of several semiconductor stocks and mega cap technology stocks, where Nvidia rose by 4% to a fresh all-time high yesterday, followed by Google up by 1.7. All right. And if you look at the heat map of the S&P 500 over here, we see three sectors that are leading the fourth. The communication services, which is primarily driven by Meta, parent company of Facebook, because they are the biggest market cap stock inside the communication services sector. Then we have some form of resurgence from the financial, and also the technology stocks that is being led by Nvidia and some other semiconductor plays. So only three of them that is holding the fort. But what I could see over here is that the defensive sector underperformed, which is consumer staples, down by negative 1.15% over here. And due to that conflicting news flow coming up from yesterday pertaining to the issue slash surrounding the US-Iran war slash conflict, the US dollar also didn't move that much. So it also continues to trade in a sideways range over here yesterday. All right. So what we could see is that most importantly, the price action of the US dollar index continues to trade below the intermediate resistance level that we highlighted earlier, 99.16, which is the gap down that was formed on 7th of April, and as well as the resistance that is being formed on the bearish crossover from the 20-day crossing below the 50-day moving average, and right now is holding below the 200-day moving average. So all trading below these three key moving averages, so giving us a scenario where there is no clear sign of bullish momentum reviving in the US dollar index. So it's more like a sideways movement yesterday, holding below various moving averages and below the intermediate resistance level at 99.16 over here. And let's see, the next situation on the highlight over here is today there will be this Bank of Japan interest rate decision. So I later let me flash the data. So basically, right, for Bank of Japan, market participants is expecting the Bank of Japan to remain status quo. That means for the fourth consecutive, if not wrong, is 1, 2, 3, with the fourth consecutive meeting to maintain interest rate at 0.75%. That's their overnight policy rate, as the Bank of Japan officials continue to weigh the risk of elevated oil prices that could potentially dampen consumer demand and as well as business confidence. So they also do not want to actually raise rates at such an environment at this juncture, given the fact that the situation between US and Iran, and as well as most importantly, the Strait of Hormuz still remains pretty much fluid. So, but most importantly over here is that a market wants to find out from their guidance. So in this Bank of Japan meeting, they also released their quarterly outlook report. So in the quarterly outlook report, the previous report they released at the start of this year in January, they upgraded the inflationary assessment for Japan for this year and as well as next year. So very likely there could be a further upgrade again. But most importantly, would there be a downgrade of economic growth? That's something to ponder on. And also, market participants will be keeping a close eyes on Bank of Japan Governor press conference. So the press conference will be typically starting at 3:30 p.m. Tokyo time. So 3:30 p.m. Tokyo time, that translates to 2:30 p.m. Singapore time over here. And most importantly, what we will see over here is that other government department in the bank in Japan has continues to remain a close watch on the FX market, especially coming out from the finance ministry. So very interestingly, prior to before today's BOJ decision meeting and also before Bank of Japan governor press conference at 3:30 p.m. Tokyo time slash 2:30 p.m. Singapore time, the key officials finance ministry that is in charge of the currency, we call it markets for the yen. Finance Minister Katayama continues to issue verbal warning, and she keep say very stark remarks saying that the authorities stand ready to respond as needed to moves in currency market around the clock. That means she's saying that the relevant authorities in Japan slash department or personnel are watching very closely on any significant movement on in the FX market pertaining to a drastic weakening of the yen. So we know that the yen last week continues to test the intervention threshold of the 160 US per yen level. And he also mentioned that we are ready to respond 24 hours a day. All right. And that also yeah. So he also mentioned about development in oil futures, suggesting that they are monitoring a broader range of markets beyond currency. That means they're also looking at how the oil market impact the economic, we call it spillover impact on the yen. All right. So with this particular statement over here, market participants are continues to be very wary to build up the dollar yen over here. So let me see whether the Bank of Japan has already come up. All right, so as expected, it leaves the short-term interest rate unchanged, the policy rate unchanged at 0.75%. So let me see whether the quarterly outlook report is out yet. Okay, I think it's not it's not out yet. All right. Okay, so let me go to the website. Whether do they have any do they release it yet? No. So sometimes they will not release it so soon. Oh, sorry. Give me a minute. Let me go to the website. Yeah, this the one. Okay, monetary policy. Yeah, this one, outlook. All right, so let's take a look at the outlook. Okay, usually this is the summary. You just go all the way down to the table. Yeah, this is the one. All right, so let's take a look at the inflation. So we'll be having a close eye on the reference one, which is the one that BOJ is monitoring, excluding fresh food and energy. So they call it the core CPI over here. So it remains unchanged for the fiscal year of 2025. So how about fiscal year 2026? There's a big jump. So previous forecast was is 2.2%, and it has a big 4 basis point jump to 2.6% for fiscal year 2026. That means starting from 1st April all the way up to 31st March next year. So they call it fiscal year, a bit different from a calendar year. So how about fiscal year 2027? There's a big upgrade from 2.1% to 2.6, and this time around they released the fiscal year 2028 forecast 2.2%. So this was the first release, right? The previous quarterly outlook, they didn't do a forecast over here. So what we see is that there's an upgrade of revision upwards of inflationary trend for fiscal year 2027 and fiscal year 2026. So how about real GDP growth? Okay, so real GDP growth also got downgraded for fiscal year 2026 by half a percentage point. So for 1%, it downgraded to 0.5%. Fiscal year 2000, slight downgrade from 0.8% to 0.7%. So if apparently there is what called that this form of stagflation fear that is in the mindset of BOJ officials based on their median forecast on their assessment of fiscal year 2026 and fiscal year 2027 real GDP growth prospect in Japan, as well as the core CPI trend. So let's take a look at what's going on in the dollar yen over here. So I believe that the dollar yen, there is not much movement. If you look at the 1 day rolling performance over here, in fact, the dollar yen collapsed a bit over here. So the dollar yen is now trading at a weakest currency pair among the major US dollar pair. All right. So based on the 1 day rolling performance, the dollar is down by negative 0.07%. So in fact, it's almost unchanged, just only a slight push down. I mean, on the intraday basis, we may see a huge move, but on a wider time frame, it doesn't really move that much. So if you look at the chart of the dollar yen right now, very quickly, let me share the chart of the dollar yen. Okay, so the dollar yen right now, okay, there's here from 30 base around what 30 basis point push down, all right, but it still haven't broke below our first support level yet at 15930 slash or 15915 over here. So it's going to trade within this range, but the RSI continues to remains rather weak over here, as you could see, still hold holding below this descending resistance and now breaking below the 50 level mark. So in terms of the technical configuration on the dollar yen, so we still expect to be sandwiched between the 20-day and the 50-day moving average over here. So unless we have a clear hourly breakdown below 159.30, 159.15, then I will tighten the pivotal resistance level to 159.95 from 160.23/45 initially. And next two support level to watch will be 158.60 followed by 15800 figure level, which is the area of the 50-day moving average, and as well as the minor swing low area of 17th of April and 8th of April that managed to find support previously. All right, so it continues to trap within this sideways range configuration. Okay, so I believe that that is despite the upgrade of CPI forecast in the quarterly outlook report and the downgrade of real GDP growth in the latest BOJ quarterly report, market participants are still wary of the potential intervention coming out from the finance ministry in Japan. So that actually explains why there is this instead of the dollar yen spiking up, is now trading more on the downside within that sideways range that I mentioned earlier. All right, so that's the story of the dollar yen for now. So the next movement on the dollar yen will be impacted potentially at 2:30 p.m. Singapore time, where BOJ governor will hold his press conference. Right, so that covers the first segment of the daily dose. So let me now move on to the second segment of the daily dose, where I will cover a particular chart of the day that I found it rather interesting. So one of the chart of the day I found very interesting will be the movement of another currency pair, but this time around will be on the Aussie dollar over here. All right, so the Aussie dollar continues to trade in a bullish trend since it's oscillating within a minor ascending channel since the low of 2nd of April. And this is the 1 hour chart. So let me share with you the chart on a daily basis so you're able to see a clearer picture. So on a daily basis, since yesterday, it managed to have a bullish reversal candlestick over here. Right, there's a bullish reversal candlestick after a test of the former 11th of August 2022 and 2nd of February 2023 former swing high. And this former swing high was got rejected previously on 11th of March. And what we could see in the last, we call it a 5 or 6 trading session, it managed to breach above it and retested it on Thursday, Friday, and on Monday it did that bullish reversal candlestick, indicating the revival of bullish momentum as seen on the daily time frame. So with this revival of bullish momentum on the higher time frame chart, this gives me what you call it a chance to showcase the Aussie dollar as my chart of the day due to its interesting technical configuration. So with that, I will tighten the pivotal support level for today to bring it down to the swing low area of last Friday, pardon me, which is 24th of April at 71.20. So this 71.20 also confluence now with the lower limit of this minor ascending channel over here. All right. So let me expand my screen so that you guys could have better view of the charts. Yeah, good. So this 71.20 will be the lower limit, also confluence with the lower limit of this minor ascending channel. Hence, given this as a very key inflection level for the continuation of this short-term intraday boost that may be involving that may be still holding fort right now on the Aussie dollar. So Aussie dollar, my chart of the day, with a revised upward short-term pivotal support at 71.20. Two key resistance level to watch on the intraday basis will be the swing high area of 17th of April, 72.11. Breaking above it may potentially take us up higher towards 72.44, 72.65 as it goes to evolve upwards towards the upper limit of this minor ascending channel. And 72.44/72.65 was previously the 4th May/3rd June 2022 swing high area, and also the one-time Fibo extension of this ongoing bullish impulsive upmove sequence since the low of 30th of March. Only breaking below 71.20 will negate this bullish tone and see a minor corrective pullback extending further towards the downside towards 70.90, which confluence with the rising 20-day moving average. Only a break below 70.90 may deepen the minor corrective pullback towards 70.33, which confluence very closely with the 50-day moving average. So that's for the Aussie dollar, my chart of the day. All right, now coming to the third part of the daily dose, which will be the key economic data to take a look out for / event. So other than the Bank of Japan governor press conference later at 2:30 p.m. Singapore time. So this is 3:30 p.m. Tokyo time. So Singapore time 2:30 p.m. What other key economic data to look out for today? So for today will be Tuesday, the 28th of April. So during the European session, no tier 1 or tier 2 data to take note of. But when it comes to the opening of the US session, half an hour later at 10 p.m. Singapore time, there's this tier 1 data called Conference Board Consumer Confidence. So we know that the University of Michigan consumer confidence continues to plunge lower to fresh low on last Friday, finalized figure. So market participants will be looking at the close line of another consumer conference data compiled by a private sector organization which is Conference Board. So market is also expecting a further lower low as well, 89.2 printed in the month of for the month of April, from 91.8 printed in the month of March. So if we start to see a further deterioration in consumer confidence going below what market is expecting at 89.2, that could also create a mixed performance in the global markets. That means a weaker consumer confidence data allows the Fed to be less hawkish, and in fact, they may reconsider kickstarting their interest rate cuts again much earlier. So that could potentially weaken the US dollar as well, which could potentially provide a positive feedback loop to global equities with a weaker dollar. So that will be at 10 p.m. Singapore time. And yes, that's about it. So that should potentially sum up the key economic data for today. So before we kickstart tomorrow daily dose at 11 a.m. Singapore time, we have Australia tier 1 data to take note of that could potentially drive the movement of the Aussie dollar and in some form the Aussie crosses and the ASX 200. That will be Australia inflation rate at 9:30 a.m. Singapore time. So market participants will be pretty much concerned on the core inflation rate. By the way, they call it the RBA trim mean CPI year on year. So market is expecting a rate hot number of 3.4% from 3.3%. So if it comes in within expectation or above expectation at 3.5 to 3.6%, that continues to deviate away from RBA desired long-term target of 2% to 3%. And that could potentially allows RBA to continue hiking rates again at the later part of this year. So that could potentially support a firmer Aussie dollar. So that will be at 9:30 a.m. Singapore time. So with that, that sum up today's Daily Dose of Market Insights. Kelvin here, wishing you guys a great day ahead and do practice proper risk management given the fluid situation that is still prevailing or lingering around between the game of poker that is still being played out between US and Iran. Thank you, and we shall speak again tomorrow.